welcome back. We are 2.5 minutes away from the Consumer Price Index this morning. As soon as the numbers come out, we will bring you those numbers and the impact. Futures are off of the lows of the morning. The Dow Industrial is now down 75 as we approach the January Consumer Price Index. The Nasdaq is down 69. We are expecting the numbers to be up 0.3% month over month, and year over year, a gain of 2.5% is what we're expecting. The 10-year yield right now is up 0.3 basis points, also off of the lows. It is sitting at a level of 4.10%. Again, the economic analysis has the CPI up 0.3% month to month and up 2.5% year over year. Joining me now is the former TD Ameritrade chairman and CEO. He is executive advisor to Coastal Carolina University president Joe Moglia, back with us. Joe, great to see you. Thank you so much for being here. As soon as we get those numbers, I'm going to jump away and Cheryl will break the story. Your thoughts on the backdrop here as we await this inflation data?
Yeah, I think one of the things that you got to look at is certainly whatever this number is going to be relative to what we saw on Wednesday with the job data. I think if we wind up getting a good number, we'll see the year-over-year number probably come in around 2.4. If it's a bad number, it's going to be 2.6. Month over month, probably a good number is 0.2. A bad number is 0.4. The combination of that with what took place, I think, the other day, if it's a good number, I think we're going to see a rally in the market. I think that's going to make it easier for the Fed ultimately to determine that they want to cut or would prefer to cut. I think no matter what, though, long term, I think when Warsh comes in, I think he's going to cut more longer term than the market kind of recognizes. If the numbers are bad, we're going to see a drop off in the market today. That doesn't mean we're not going to see lower rates between now and the end of the year, but we're not going to see them tomorrow.
Yeah, Joe, most people are expecting 2 rate cuts in 2026. We've got some actually expecting 3 rate cuts. We had Louis Navellier on yesterday. Where are you in terms of the rate cuts? How many cuts are you expecting for this year, Joe?
But I think we could see as many as 4. I think we'll see a minimum of 3. I think it's all because I don't know Kevin Warsh personally, but I know a lot of people that know him. And from everything I gather, he's the type of guy that really does understand the markets, what's going on, et cetera. I think he recognizes the productivity that we're going to see in AI is going to be so significant, is actually going to help us with inflation. So I think he knows that he's going to be able to cut and have room because of that.
Right.
Plus, he's already said that
he's not going to. Market is on the move. Joe, let me interrupt you. Let me interrupt you. Market is on the move. It just went positive. Cheryl Casone with the CPI right now. Cheryl.
All right, Maria, so here we go. So we came in a jump of 0.2% month over month. The street was looking for a gain of 0.3%, so a little bit less than expected. To be clear here, year over year headline number, Maria, it's the same thing. Actually, we came up higher by 2.4%, and the street was looking for a gain of 2.5%. Look at the markets go. Change in direction for the Dow Jones Industrials. Core month over month, that coming in with a gain of 0.3%. And as for the year over year number on a core basis, let me dig in and get you that really quick. And I'm looking at energy. There's a fall in energy, by the way, here. A loss of 1.5%. Gas down 3.2%. So that's where we saw kind of this shift in this CPI report. This also just kind of flags the overall number we got for 2025 of 2.7%. We always see shelter as an important component of this release, and we are seeing that again, but it really does not outweigh the story that came from that reduction in energy prices. There you go. Here's what the government is saying about where they saw the gains that we had. Shelter, a gain of 0.2%. That was still the largest factor in the overall report, and they did see a 0.2% jump in the food index, both at home and away as well. That was a gain of 0.1%. But again, the offset here, sending it back to you, Maria, sorry I'm talking too much, was the offset for energy. Again, that overall energy story is what kept inflation tame for the month of January. Back to you.
And this goes right back to President Trump's policies and how he has aggressively tried to rein in the price of oil and gasoline. You look at this number, better than expected. You attribute it to the price of gas and oil here, and that is why you're looking at the inflation story not hitting the consumer. Even though the underlying price is on the producer level, whether it be copper, silver, gold, et cetera, have had a good 2020. 25, and those underlying metals that have risen, you're not seeing it passed on to the consumer.
Yeah.
The CPI better than expected. That's why you're seeing the market turn around, and that's why you're seeing this CPI at a very tame level. Attribute it to the president's policies. That was his #1 priority when he first came in office for the second time. Cheryl.
Yep, absolutely, 1,000%. And this is where you keep hearing all this rhetoric about the midterms and how the Democrats are going to seize on these opportunities. No, no, no. When you, as you've mentioned too, Maria, when you see that pass through in the tax returns that Americans are going to see, when you see gas station oil lower, you see gas station prices continue to stay at these low levels. That's, it's all the boats rising here, Maria. All the boats. And I think absolutely this is really good news for the market and also for the economy overall.
When you strip out the food and energy volatile sectors, it was right where the market expected, up 2.5% year over year. But by all means, this is a much better than expected report with this consumer prices rising, but rising lower at a slower pace than actually the leading economists out there were expecting, with a gain of 2.5% over the year and 0.2% in the actual number for the January CPI. Do you have any expectations in terms of what you're focused on next week? The producer price index is going to be one area that certainly this market will focus on next week, Cheryl.
Yeah, no, producer price index, because again, that's obviously more of a leading indicator than you would for CPI-C. But again, if I have no indications for PPI that we're going to not have the same energy story at the wholesale level for energy that you're seeing at the consumer level. So I have a feeling that the markets are going to be really looking for that. And then again, that PCE price index again. Look, I mean, this again, this number, and I said it, I'm going to, Kenny Polcari said that we were going to get a better than expected CPI number. I disagreed with him on this program. I will give him credit and say that I was wrong. I was expecting a hotter report today than we got. And again, that energy story, #1.
Well, this is a hot number. It's just not that kind of hot. Joe Moglia, real quick, jump in here. Your reaction to this better than expected report.
If you recall, just 1 minute before the report came on, I said that I could see us having a 2.4 number year over year and a 0.2 number a month over month. And I thought both of those numbers are going to be good for us relative, especially with the jobs numbers that we saw on Wednesday. And I think all of these help us help the Fed have reasons to wind up cutting maybe prior to what they normally would have done.
Yeah, Joe, real quick on crypto, what do you want to say about this huge sell-off? I know you're a holder of Ethereum.
Yeah, I think when you look at the future, I think stablecoin is going to be the bridge between the traditional finance world and the DeFi world. I think tokenization is going to be the infrastructure upon which the entire capital market substack is going to be built on. Crypto rails is going to be the way to be able to deliver that. So I think longer term, the market, the financial world, the way we know it today will not exist the way it exists today. And the gas behind that is going to be crypto. So while crypto has really gotten hurt the last few months, I think you could look down the road and not believe that you would have been able to buy it at these prices today.
All right. Well, you're bullish. Joe, good to see you. Thank you, sir. Joe Moglia this morning.
Good to
Stay
see
with
you,
us.
Maria.
We'll be right back with a better than expected CPI and the impact.